it was publicized and disclosed. I think it was last week that we had responded to the SEC's request for information around our Bitcoin filing, and we responded. And that's basically all we can say. I think many people think the fact that the SEC chose to ask questions is a change in behavior. And therefore, I do think hopes are rising that a number of Bitcoin ETFs will be approved. I do believe maybe the reason they're saying by the end of the year, early next year, I know our final deadline on this filing is January 10th. And so, and I think we're first in line, but as you say, a number of Bitcoin ETFs could be approved at the same time. I think there are a couple of things going on. If you'll remember, in late 20 and early 21, the flows were enormous into our funds, and I was uncomfortable at the time because we thought there was a lot of momentum chasing going on, and we said at that time, keep some powder dry. Little did we know how big the correction would be. This is sort of the flip side of that. We're feeling much more comfortable right now, but we did have through July a very significant rally. I do think there's been some profit taking there. And I do think, as you say, interest rates, rising rates have concerned a lot of people. There's been a shift into cash, and we've seen very recently a shift into bonds. And interestingly, the flows into bonds would suggest that we should not be far behind, because if bonds are going to rally, and we think they will at some point here, as inflation continues to come down, as the economy continues to go through rolling recessions of sorts, we think that the backdrop will be right for a resurgence in growth stocks generally, and in particular, long-duration innovation growth assets like ours.
Let's dive right in with a major warning from the U.S. Securities and Exchange Commission. They took to social media to set the record straight after a roller coaster of misinformation in the crypto sphere. They cautioned, careful what you read on the internet. The best source of information about the SEC is the SEC. Ouch. What caused this drama, you ask? Well, it all started with an inaccurate report claiming the SEC had given the green light for a BlackRock Bitcoin ETF. A media outlet, Cointelegraph, published this news and social media ran with it. But here's the kicker, folks. BlackRock swiftly debunked these rumors, stating that their ETF application was still under review. Cointelegraph, in a bit of a misstep, initially reported this unverified information as fact, but then they later revised their article to add the word reportedly. The damage was already done, though. Readers were not amused and had a field day with criticism and memes calling out journalistic integrity. The report and the frenzy it caused contributed to roughly $182.5 million in crypto liquidations within 24 hours. Ouch, again. Here's the big question, crypto fans. Could these episodes of misinformation hurt Bitcoin ETF approval chances? It's a vital concern. Such false alarms led to a wild ride for Bitcoin's price, surging to nearly $30,000 before taking an 8% nosedive. Some crypto observers argue this kind of thing could give the SEC more reasons to say no to Bitcoin ETF applications. But hold on to your hats. It's not all bad news. Bloomberg analysts remain surprisingly optimistic, giving a 90% probability of a spot Bitcoin ETF approval by January 10, 2024. Fingers crossed. Shifting gears, Bitcoin had a wild day. It surged a whopping 11% in one day, and it was a significant jump we've seen in a while. The price hit $29,907, and Bitcoin's market cap skyrocketed to $545.1 billion, making up over 50% of the entire crypto market cap. It's not quite back to its all-time high of nearly $69,000, but it's a step in the right direction. Oh, but the drama didn't stop there. BlackRock's CEO, Larry Fink, weighed in on the situation during an interview on Fox Business. He said, "It's just an example of the pent-up interest in crypto." He believes the rally was a flight to quality, with more people seeking refuge in assets like Bitcoin during uncertain times. Let's continue our discussion with Cathie Wood.
If we're paying attention to company earnings and some of these are companies we're exposed to, others not. You'll see at both the high end and the low end of the consumer spectrum in terms of price points. You've got Domino's saying, hey, it's really weak out there. We've got to do more promotional activity. And you've got LVMH, same thing. Both of those happened last week. We're paying attention to company reports, and I understand the economic statistics are volatile and showing strength and then weakness. We're paying attention to our companies, and it does seem like the consumer is starting to give way here. We see NVIDIA. You might say it is less expensive than Tesla. We think the upside surprises on Tesla during the next 5 years, and remember we have a 5-year investment time horizon, are going to be substantially more than NVIDIA's, mostly because most analysts do not believe that autonomous as a taxi platform for Tesla is going to be a part of the story. We disagree. And with that, we see incredible revenue and margin expansion. NVIDIA's margins are already quite high, having entered the 70s, the gross margins. Tesla's are in the 20s, and we think they will scale into the 60s and 70s as autonomous takes off. So Tesla, we believe, is the biggest AI project, or autonomous driving is the biggest AI project in the world. NVIDIA has been critical to providing the infrastructure to enable this and so many other things to happen. All praises to NVIDIA. We think that a lot of people understand how important NVIDIA is in this ecosystem, and they do not understand how much each dollar of hardware spent is going to pull software through. We think it's on the order of 20 times. So we think NVIDIA is going to be a good stock. We think the stocks in our portfolio, we've written a paper on artificial intelligence. It's titled Investing in Artificial Intelligence, Where Will Equity Values Surface? You can read that on arc-funds.com and see how we're a really good diversification into this AI world. Many think that the winners are going to be the mega tech companies who have had such strong performance over the years. We are not sure. ChatGPT could be the best thing that ever happened to Google, and that it lit a fire under Google to get its own AI into the market more profoundly. Or it could be the worst thing in that it's going to lose its advertising franchise if we're all just on ChatGPT looking for our answers.
So there you have it, folks. Another day in the crypto world filled with ups and downs, misinformation, and a rallying Bitcoin. Stay tuned for more thrilling stories and crypto updates. And remember, keep those cryptos safe and your wits about you in this ever-exciting space. Thanks for tuning into Crypto Chronicles. Until next time.